Alright, welcome back everybody to another YouTube video. Today I'm going to be walking you guys through some technical analysis and what I do to determine if it is the right time to sell some options on a stock. Generally, there's a couple things you want to look at. First of all, I wanted to show you guys that today was a red day. You know, not every day in the market is going to be a winner. And I think this is an important thing that we have to establish, that the stock market, even though for the most part, you look at a 5 to 10 year, you're going to see that it moves up, right? But if you look at a one day, like today, my account is down 3%. A lot of people, they see, $2,000 you just lost in one day. They would start getting scared, they would get worried. A lot of people would even sell out. In my opinion, from my experience, stuff like this is going to happen. You're going to have red days. And one important factor that I wanted to look at today before I get into the technical analysis is the fact that the market right now, we're looking at all-time highs, right? So you look at HIMS for an example. If we could load this up. The 52-week high is at about $73, right? We're at $65. Earlier today we were at almost $70. So we're looking on the farther side of the 52-week high. What that means is in 1 year, in the past year, we're on the higher side, and you can see this all throughout the stock market. We can look at Meta, for example, which is Facebook and couple other platforms like WhatsApp. But let's go back here. So if you look at the 52-week high, it's at 784. We're at 768, so we're going to see this all throughout the market, is that a lot of these stocks, they're at their 52-week high. Now, this doesn't mean that it's a terrible time to invest and that you should stay away right now. But generally, when stocks are at a 52-week high, you're going to see some pullbacks, and this is a healthy thing to see in the stock market. You obviously don't want stocks to go up and up and up and up and up all the time, because that means you're going to see a big crash. But sometimes you see a little pullback. There's going to be a correction or a crash. Like we saw a crash in April, which was about what, 10-15% in just the S&P. So things like this are going to happen, and I just want to make sure that everybody understands that this is normal. These things are going to happen, and we should still continue to invest. At the end of the day, we are investing for a long term. We're not day traders. We are investors. And to become an investor, you have to understand the longevity of the market. And at the end of the day, in a 5 to 10 year period, the market only moves up. So think about it like that, Anyway, let's move forward here. I'm going to show you guys what I look at as far as technical analysis when it comes to selling cash secured puts on a stock. So what I do here is I would go to HIMS stock, and then we're going to open up the advanced chart. So right there. And I know it looks pretty intimidating at first, but there's two main things that you really want to look at before selling cash secured puts on a stock. Number one is going to be, so make sure, if you don't have these added already, make sure you have the RSI added, and make sure you have the Bollinger Band added. These are your bread and butter right here. This is what's going to help you look at a stock, do some technical analysis, see if it's the right time to invest. One, to either buy a stock, or two, to sell cash secured puts. So if we look at it here, so a couple things I look at. One, let's look at the 1 month. So at the 1 month period, so this is what a Bollinger Band is. The Bollinger Band shows you the higher side of the stock and then the lower side of the stock, right? So in a certain period, the Bollinger Band tells you at the highest point, it's going to be at about $72. And at the lowest point, it's going to be at about $57, right? If you look at it right now, it's a little bit past the median right here, which is at about $64. Now, what does that tell you? It is not the greatest time to sell a cash secured put. Another example here is going to be the RSI chart. So you look at the RSI right now, it's at about 61. The RSI tells you if it's overbought or if it's undersold, right? Or sorry, oversold or overbought, right? So 50 is fair. 50 is about average. If it's above 50, that means it's probably a little bit overbought right now for the price of the stock. If it's lower than 50, that means it's oversold, right? So generally, when you're selling a cash secured put, you want to sell options on a stock that's oversold, right? So we want to see the RSI ideally a little bit lower than 40, right? So right now it's at 60 and it's over the median in the Bollinger Band. It is not an amazing time to sell a cash secured put. I'll tell you what though. I'll tell you what. For new traders who do want to get into this, one thing that you have to understand is if you really believe in a company and you think that the price of the stock is going to keep going up, you think what they're doing is something that's really going to make a difference in the market, then if you can get the stock at about $58 or somewhere near the bottom here, that's a win, right? That's a win. And that is the luxury that you get of selling a cash secured put, is the fact that you, even though the stock right now is over here, you can buy the stock over here still, right? So you're going to put up the capital. So say you want to buy 100 shares of this stock, but you don't want it at $66. You want it at $57. You know, you get a little $8, $9 discount. That's what we want, and that's the luxury of selling a cash secured put. You look at the 3-month here, it's really high compared to where it really should be, which is somewhere over here. But because we're in such a bullish market right now and we're seeing all-time highs, this is what you're going to see all throughout the market, is that stocks are high right now. So what do? You sell a cash secured put. If it keeps going up, you get to keep the credit that someone paid you for the put. If the stock goes down, well, okay, then I guess you get to buy it at a cheaper price. So it's a win-win, really. It's a win-win. Now, of course, there is a chance that it can go even lower than this. But in a situation where it goes even lower, all you have to do is hold it. And then when it comes back up, what do? You sell a covered call. You have your 100 shares. And if it goes up, well, you get to sell it back up here. So you get to buy it down here. And you get to, you get to buy it up here. You get to buy it down here. And then you get to sell it up here. That's the luxury of options. And that's why I think it is a much smarter way to invest instead of just buying stock. Now, don't get me wrong. My strategy is to have an account where you are just buying stock and you get to just hold it. But if you really want to grow your account, if you are a newer investor, this is the way to go as far as growing your account, going from a couple $100s to a couple thousand, from a couple thousand to a couple tens of thousands, and then so on and so forth. So let's go ahead and see what we can do with HIMS. HIMS is just an example, of course. There's plenty of stocks out there where selling options is a great strategy, where it makes sense to sell options. But you could really, so when you're selling options, the big point here is to pick the right stock. If you don't pick the right stock, you might get yourself in a little bit of trouble, right? But I believe that HIMS is a great company. They report great earnings, and they're really changing the pharmaceutical market. You know, getting stuff delivered to your house, getting these pills, this different medicine delivered to your house makes a big difference, you know, especially for like the elderly or people who, you know, don't specifically want to go into a pharmacy and go face to face, talk to someone about whatever they're going through, and they just want to get it online. HIMS is making a big difference. So what do we do here? So let's go to HIMS. Let's go to the chart. So remember the RSI and the Bollinger Band. Those are the two big dogs that you really want to look at. So let's trade some HIMS options. So right now we're at about $66, right? So if we look at the options here, ideally you want to go at least a month out into the future. So 1 month into the future, we're going to sell cash secured puts, right? So let's look at it here. We are at about $65 here, but the break even would be $57. Now, say you want to play it a little bit more safe. You don't want $57. You think can drop this $8 here. So what do? You go for a little bit cheaper of a break-even price. So you can go with the $55 here, right? Generally, your chance of profit is going to go up, but the amount that you're getting paid is going to go down, right? So here, you have a 70% chance to make money on this option. What does that mean? It means you're probably not going to get the shares, and you're just going to get paid this amount right here. Now the luxury of HIMS is you're going to have to put up $5,600, but you're getting paid $385 in 1 month, right? So let's look at the calculator here. $385 divided by 5,600. Let's do this, divided by 5,600. So you're gonna get almost 7% return on your money in just 1 month. Now, on average, the S&P returns you 8% per year. That's on average. But here you can see at a 70% chance of profit, you're gonna make 7% back on your money. That's a very lucrative strategy. You are not gonna be able to get these returns anywhere else. You know, it's going to be hard to get 7% in a month, but not when you're doing options. Not when you have a stock like HIMS that gives you the power to either pick up these shares almost $15 cheaper, $14 cheaper, or you get paid 7% back on your money. So this is my idea. You know, you're getting a 7% return. You multiply that by 12. That's almost 100%. That's 82% return on your money. 84% in 1 year. That's a great strategy. You know, people don't get 84% returns in a year unless you're buying a really up and coming stock, and honestly you're gonna have to get pretty lucky. But that's my idea with options. This is how you can see with my account that I've returned almost 100% this year. So you look at my returns just in this 1 year, we're at about, if it'll load, 93% just in 1 year. And this isn't a crazy return if you're looking at stocks like HIMS where you can sell a cash secured put and you can make 7% on your money every single month. So this is my idea here, guys. You know, if we're in a great market and you have a great stock that you truly believe in, sell some cash secured puts on it. Now, of course, people might say, oh, $5,600, that's a lot of money for it to sit for a whole month just to make a couple $100. Well, you got to think about it like this. You need money to make money. You know, it's not going to come out of thin air. If you have a couple $100, well, buy some stock and, you know, you can buy your S&P, get your 8% return per year. But go get a better paying job. Go get some cash that you can use to invest. Because when you have a lot of cash, you can make a lot of money on it, right? $5,600 truly isn't that much money. And you can do this every single month. See, when I started off earlier this year, I was at $28,000, you know? So I was doing this, call it 6 times, 6 different option strategies per month. 6 times $400, you know, you're making a couple $1,000s every single month. That's passive income that you can make. Where else are you going to be able to put up 25, 30 grand and get paid almost, you know, 8 to 10% back on your money every single month? You know, it's almost unheard of. So make sure that you find a good stock, and I would recommend trying the strategy out at least because it is very lucrative. You know, 8% per month is a great return. Like I said, the S&P returns 8% per year. So yeah, I mean, this is it really for now. The technical analysis that you mainly want to look at is the Bollinger Band and the RSI as far as the very, very basics of a stock. Of course, you do want to look at their revenue. You want to look at their earnings. You want to see what they're doing, what they're saying they're going to do in the next few years. You know, what are they predicting is going to happen with the company? Listen to the earnings calls. All of this stuff is very important if you want to make money on the market. But as far as knowing when it's time to sell a cash secured put, if you want a stock cheaper than it is right now, sell a put because you will get it cheaper. And if you don't, then you're gonna get an 8% return on your money in a month. So this is the power of options, guys. It is just a way to leverage your money and to get in stocks a little bit cheaper. One thing that I really want to look at here before we wrap up this video is, so if you look, let's go back and look at the 1 month here. Call it September 5th. We're looking at so if you open this up over here, we're looking at a 0.25 delta Generally, you want around a 0.3. If you want to be a little bit riskier, you can go up to 0.35 or maybe 0.4. If you really want the stock, remember, the higher the delta, the more likely you are to end up owning the shares, to end up owning 100 shares of the stock, right? So this one is even better. You put up $6,000, you're going to get paid $530. It's almost 10% return on your money in a month, you know? So if you open this up, one thing that I want to look at here is your max loss. Your max loss here is $5,470. Now, what does that mean? I don't want to lose 5,400, almost $5,500 in 1 month. But guys, the only way that you are really going to lose this money is if HIM stock goes to $0. If they go bankrupt within 1 month. That's pretty unlikely. That's pretty unlikely, okay? This company is booming, their returns are great, and they are growing like crazy. So it is very, very unlikely that you're gonna end up losing this $5,500. What's most likely gonna happen is you're gonna get paid this $530 in 1 month, right? Almost a 10% return on your money in 1 month. So don't be scared of this $5,500. It's kind of scary to look at in the beginning because you're like, oh, I could lose $5,500. It's very unlikely. If you pick the right stock, it's almost impossible, okay? And like I said in my previous video with NVIDIA, at some point I did end up getting the shares given to me, and I did go down a couple $1,000s, but what did I do? I just held it, and then I immediately started selling covered calls when the stock bounced back, right? So that's the luxury of this. You're getting a 10% return on your money, or you're getting 100 shares of a great company. So it's a win-win situation. I think this is one of the only strategies in the market where it is really a win-win. You either pick up a great stock for damn near $10 cheaper than it is right now, or you get a 10% return on your money. Okay, that's going to be it for this video, guys. Thank you for joining me today. Make sure to like and subscribe if you enjoyed the content. I hope you got something out of it, and I'll see you in the next one.